I would like to welcome Mary Kathryn Lynch to the microphone. Mary Kathryn is the CFO of Renew Financial, and I will let her tell a little bit about herself and what that is.
Hi, good morning to West Coast people, and I guess still morning for other people as well. I wanted to also just say to Simone that I really enjoyed learning about that product. I didn't know that it existed. And I would love to see you referenced a white paper. If you can put that in the chat, I'd love to take a look at it. So anyway, good morning again. I'm Mary Kathryn Lynch. I'm the CFO at Renew Financial. Renew is a competitor of Wygreen. Greg was the first speaker. We are based in, sorry, there's like a light on my face, I think. We're based in Oakland, California, which is also where I live. Renew was started in 2008 to develop residential PACE. Our mission is to provide financial access to a safe, healthy, and sustainable world. Renew has, since its inception, has generated well over $1 billion worth of PACE financing. And I can spend some time later talking about the business, although Greg did a fantastic overview, but I'm happy to answer questions about that. But today I'm talking about a slightly different aspect of PACE, which is the benefit to the community, or community benefit financing. So first, what do I mean when I talk about this? So I'm talking about financing that benefits the community, or said another way, of financing that provides benefits beyond just the ability to purchase the thing that you're financing. So for PACE, there are a bunch of benefits, but I'm going to focus on 4 today. So the first is credit access and financial inclusion. The second is resiliency. Third is local jobs, and fourth is cleaner environment. So the first one is pretty important, which is credit access. So PACE is underwritten based on a homeowner's ability to pay, the amount of equity in their home, their property tax history, their mortgage payment history, and other factors. But you'll notice that I did not mention FICO in that list of underwriting criteria. So we do not underwrite based on FICO. Today, there's a lot of discussion going on about whether credit scores reflect historical biases. We do know that 1 in 5 Black consumers and 1 in 9 Hispanic consumers have FICOs below 620. And that compares to 1 in 20 white consumers. So PACE operates in the state of Missouri, although we Renew do not operate there. The president of the Missouri NAACP recently wrote a piece supporting PACE, and he specifically called out that communities of color are disproportionately denied for lending products such as second mortgages or home equity lines of credit, because he believes that credit scores include latent discriminatory filters. And if you do have a lower credit score, you're going to pay more. So in his view, this acts it's restricting credit and acts as a tax. So we know from data how FICO scores map to financing costs. So if you look at solar loan customers, for example, solar loan customers have high FICOs, probably 750 to 760. And the coupon on those loans is maybe 4% or 4.5%. If we look at just general unsecured home improvement loans, FICOs are a little lower, around 700. Coupons are much higher, 10 or 11%. If you go farther down the FICO scale to like 650, financing costs are like 30%. So then you look at PACE. Our FICO score is average FICO is about 680. Our coupon is a little over 6%. So PACE is offering lower FICO customers affordable financing, and they can, they can save money on their utility bills. They can keep their families safe from hurricanes or fires. They can have a more comfortable house. Our financing, as I say, is about 6%. If you compare that to a 10% project, you're going to save about $7,000 over the life of the project. So we recently surveyed our customers and asked them what their alternative form of financing was if they didn't do PACE. Half of them said they had no alternative. So Florida homeowners who want to protect their house from a hurricane or put in an HVAC system that had broken or fix their roof had no alternative if it weren't for PACE. The second benefit that I'm going to talk about is resilience. So in Florida, the hurricanes come in every year. PACE allows homeowners to install wind-resistant windows and doors that are going to keep them safe, as well as save money on their insurance premiums. USC conducted a study that found that $1 invested in a wind resiliency project in Florida results in about $1.85 of avoided damages and about $2.50 over the life of the project in insurance premiums. And we hear this from our customers as well. We poll our customers. We ask them if they're happy or if they're not happy, if they have any feedback for us. So one of our customers in Palmetto, Florida wrote that PACE has allowed him to feel safe because he has a new roof now that doesn't leak. And he saved 30% on his insurance premium. So I live in California, and I can unhappily report that we seem to have moved into a mode where we have wildfires every year. And they'll result in a loss of life, billions of dollars of air damage, and air that you do not want to breathe. I just got some air purifier. I just bought an air purifier for my house because I know it's coming. I know the smoke is coming. It's happened the last few years. We're just kind of bracing ourselves. The utilities have started initiating blackouts to try to prevent the fires from happening in the summer and fall. So PACE allows homeowners to install solar plus storage systems or fire hardening measures, which not only help the individual homeowner, but the whole community. So in California, solar plus batteries means that we need fewer power plants and fewer transmission lines, which have been the culprit in a lot of the wildfires that have happened. And if a home retains power during a blackout, people can continue to go to work, they can continue to go to school, run their refrigerator, or run their medical equipment. Third community benefit of PACE is that it creates local jobs. Residential construction projects cannot be offshored. They create local jobs and they support the local economy. PACE Nation, which is a PACE advocacy group, I guess I'll say, has written that PACE has created over 128,000 jobs and financed well over $7 billion worth of renewable energy and energy efficiency projects. And the fourth benefit of PACE is that it contributes to a cleaner environment, which helps everyone. Greg had a lot of fantastic numbers about the amount of carbon that's been reduced, the energy savings, the water savings, which are really important in California. And because PACE is not tied to FICO, homeowners in areas that have been historically neglected in terms of resilience and energy upgrades can benefit. We estimate that We Renew have reduced greenhouse gases by 1.4 million tons, saved over 900 kilowatts of energy, conserved over 207 million gallons of water, and created 2.8 billion kilowatts of renewable energy. So that's the end of my my prepared remarks about community benefit financing. So if people have questions, I'll take a shot at answering them.
Mary Kathryn, thanks so much. We have a couple questions rolling in. By all means, folks, just type them right into that Q&A, and we'll got a good 10 minutes here to get through everything. I'll throw out a first question, just something real basic. The impact of this is real obvious, and really, you've already laid out some data points for how positive this can be, not just for the savings, but also the community benefits, which is really, really cool part of this. What do you do to raise awareness for this? How aware is particularly the low-income homeowner community who might otherwise be difficult to reach? How are they engaged so that they literally just know that this program exists and that this opportunity is available for them?
Yeah, that's a great question. We Renew, and I'll also, if Greg has thoughts on this as well. I mean, we Renew do not do a ton of reaching out directly to the consumer. We typically are operating through the contractor, but we have realized that is an imperfect vehicle for some messages. So we are actually in the process of trying to make that message to the consumer more directly, because I think it's pretty important.
Very good. I've got a question from Stephen Hall here. I'll just more or less read it here. Was recently working on a 40,000 square foot mixed use project. Says that the lender would not allow it, presumably PACE, lender would not allow it when factored into the debt service ratio when the assessment payments were included as project debt. Comments?
So that sounds like a commercial project, based on the fact that it's
mixed use. Yeah.
Use. We do not do commercial projects. Okay. I mean, I know I'll refer to Greg. Commercial project. If
Greg wants to jump in, feel free.
Sure. That's a common question, a common way to look at it. I'm not surprised a lender would say, well, what is the amount of cash flow that's available to service the mortgage debt and to service the annual PACE payment? That's classic, and a lot of PACE lenders will allow that to go down to a 1.0 to 1 ratio. Lenders may feel that's way too close for comfort and will size that metric to a 1.2 or a 1.25, 1.3 level, which could end up reducing the amount of PACE financing to get to that level of debt service coverage.
Cool, got it. I'll throw another question out there for you, Mary, and presumably Greg, if you want to jump in, feel free. Another question about just the availability of PACE in general. Now you're working in Florida, you're working in California. My understanding is this is not possible in some states. What's the status on making this a more universal nationwide program, and what are the hangups in the progress to doing so?
Yeah, I think over the next couple of years, we hope to see some more states opening up. Greg mentioned Ohio. There's also a PACE program in Missouri, although, as I mentioned, we don't operate there. Michigan is looking at residential PACE. New York is looking at residential PACE. Also Texas, our CEO was recently in Texas talking to the legislature down there. So states are looking at it, and there's I'm sure everyone on this call knows at this point, there seems to be pretty good tailwind nationally for environmental programs in a much larger sense. When Biden was vice president, the Obama administration was a big proponent of PACE. So we're hopeful that not only that states will be taking action over the next couple of years, but we would love to see some type of national standards for PACE. Some states have legislation that enables PACE, but it's not really workable from the perspective of an originator. So sometimes legislation needs to be changed. We also have to work with local communities to get them to opt in. Once PACE legislation is passed, there's still additional steps in terms of working with local communities to get them to opt into PACE. And then, of course, we have to, just from a business perspective, set up in that state and build a contractor network and all those types of things.
Another quick question on quantifying some of the benefits here, making the argument for this. The energy savings and things like that are easy enough to quantify, but what other types of community benefits are you, putting together when you attempt to quantify the overall benefits of what it is your overall impact?
Well, in general, having a safer community it's a big impact, right? Particularly, I'll mention Florida again. Hundreds and thousands of Florida homeowners installing wind resiliency measures so that their houses are safe from hurricane. That is a huge benefit to the community. It helps that individual homeowner, but having a community that is not devastated by a hurricane and the houses are still secure, people can go back to their lives after the storm rolls through. They don't, it's not devastated. They don't have to, in the sense where the houses are fully protected. There's not massive construction going on. There's not relocation costs. It is a truly community benefit to have that type of resiliency.